Good morning, everyone, and welcome to Weekly Profit Talk. As you might imagine by the name, we do this every single week, Wednesday mornings at 8:30 Mountain Time to be exact. Be that Mountain Daylight or Mountain Standard. We're in Mountain Daylight time now, and they're making all kinds of funny noises about possibly keeping daylight time. Kind of comes up every year lately, doesn't it? Anyway, good morning, everyone. Let's talk today about profitable practice on paper, broken the bank. That's the subject of this week's Profit Talk. So we do reach out on a weekly basis when we talk to people in the medical profession, but you'll find that a lot of the principles that we're having our conversations about basically spill over to other entrepreneurial endeavors. You might find something interesting here. So stick around for a few minutes. I'm probably going to keep this under 10 minutes for you. So let's begin. And I'll go ahead and I'll do this. Appreciate your patience here. Now, your profit and loss says you had a great year. Your accountant's nodding with approval. Here you are, you're looking at a checking account, and it says you don't have enough money uh, to cover an expense that you know is coming up. It is the strangest math problem in private practice ownership. Profitable and solvent basically mean two different things. Your profit and loss is an opinion, your bank account is a fact. But the disappearing act happens several different ways. Let me touch on something of the bank account first. Um, I do see this quite a bit, not only with medical practices, but other businesses as well. People will do bank account solvency, which basically means they need 500 bucks. They look at their checking account, it's got 2,000, so they go ahead and grab it because they're able to do the subtraction, and that leaves a difference of $1,500. That sounds okay, but you're basically not thinking about your overheads of the timing of your various expenses throughout the month when you do this. So, um, though your bank account is a fact, it's also very misleading sometimes. It's good to know all of your numbers. Having said that, the disappearing act that basically causes the shift between profitability and solvency. Um, Three things I've written down here. First of all, you got insurance reimbursement lag. Now, I know everybody I'm talking to out there right now knows what this is. You could be paid by not only the patient themselves, and hopefully you're collecting co-insurance and co-pays up front. You should be able to calculate that and actually not bill in the future. But a lot of practices still bill primary insurance first, and there could be secondary. If your patient is of Medicare age, you most likely are going to have a secondary insurance, what they call GAP. And so you're dealing with Medicare, their UCR, whatever comes back, you send off the secondary. If you are basically booking that as income in the accrual method of accounting, which means you basically count it as income, as soon as you bill it, you're going to have a lag because you don't have the cash to back up the amount of money that you think you made. Um, like it says here, the payer disagrees. Well, it depends on who the payer is. It might be that primary, secondary, even tertiary insurance in some cases, especially in family situations. And then, of course, remember um, that at the end, or hopefully, if your system is accurate during the point of service, you should be billing the patient up front. So, owner draws taken against future cash instead of cash on hand. Now, that's a little counter to what I said about bank account solvency. You basically want to watch your draws. They should never exceed your net income, particularly if you're an S corporation. This sounds like kind of one of those no duh statements. It's like, yeah, you can't take more money out than you have. Well, there is a way to do it. If you're running a credit card, and you're slow paying it off and you're still paying interest expense each month because you've got a balance on that card, you're basically reducing your profitability by the amount of your credit card spending. That credit card spending actually shows up on your statement of cash flows as cash coming in, but you don't actually have any cash. It's all phantom. So, what happens here is if you take more money out of your business, in a particular year than you put into it in net income, you could actually find yourself paying a second tax. That has been the subject of past live conversations, and I'm certain it'll come up again. So, debt service and equipment purchases that never touch your P&L at all. Um, Debt is what? A liability. And your equipment purchases, once you buy them, provided that it's not a de minimis safe harbor purchase, it's going to show up on your balance sheet. Now, a balance sheet is different than the profit and loss statement, and these expenses don't appear there. That new imaging equipment or practice loan payment is a cash outflow, and your profit statement never sees it because, like I just said, it's not on your P&L, it's on your balance sheet. Why your tax preparer never mentioned this? Nobody's telling you what your cash position is going to look like in 90 days because that isn't tax preparation. It's basically not their job. You're giving a guy a bunch of numbers, how you performed in the previous year, having him turn that into a tax return, filing it, and paying any tax that's due. And if you owe over $1,000 in tax by the time you do that, we need to talk because you should be making estimated tax payments and you should be getting good advice on exactly how much to make in payment each quarter. So, that's called financial leadership, and it is an entirely different job. So, compliance accounting tells you what happened. It's a history lesson. Okay. Cash flow forecasting will tell you what's about to happen, why you can still do something about it. And yes, you can forecast cash up to 13 weeks out. I like to call that the 91-day forecast because do that math, 13 times 7. If nobody's shown you the difference, you haven't been getting bad advice. You're simply missing at least half of the conversation. So, what this actually costs you, your 2 a.m. math sessions where you're struggling over understanding where your money is, isn't really about the money. It's about the sinking realization that you can't trust your own numbers. It's costing you sleep. It costs you confidence in decisions that should feel obvious, like whether or not you can actually afford to hire that next provider or purchase that next piece of imaging equipment that you need. And it's going to cost you the one thing in private practice that was supposed to give you, in the first place, the sense that you're genuinely in control. Okay. So, profitable in practice, broke in the bank. These are some of the things that, if they resonate and ring true for you, there is something you can do about this. Let's talk about that for a second. So, um, if you want confidence in the decisions that should feel obvious, and you want to feel like you have some control over your financial present and future, it might be time to have a conversation with somebody that can be a guide for you. Not the hero of your story, but a COO, a CFO, I should say, that works with you hand in hand to help you with the kind of decisions um, that you're going to need to be able to make in your practice and that you quite frankly can't be blamed for not knowing about. You did 10 years of school to learn about the anatomy of the body and all that chemistry and the residencies and the lost sleep and everything. They didn't teach you much about financials. I guess they just assume everybody's going to go out and work at a hospital or for a group or something. So there's no shame in reaching out for professional help. And if you're interested in doing that sort of thing, then let me provide you a little bit of insight here. You can reach out and get help from me if you are interested in having that conversation. Simple first step is let's talk. The first conversation is always free. We spend about 30 to 45 minutes getting to know each other, ask you questions about your situation, and learn if it would make sense for us to work together. After that, let's sit down, crunch some numbers, review some information, and basically propose to move forward with helping you to put tens of thousands of dollars back into your practice and save taxes as well as understanding your profit and your cash flow. These things can go hand in hand, even though they do mean two different things. So, if that makes sense and you'd like to have that conversation, we are coming to you either live or you might be watching this in replay um, on YouTube, LinkedIn, or of course, Facebook. And if that's the case, you've got a comments capability in all three of those. Just write more info or help or a conversation or let's talk or something clever. Within the next 24 hours, we'll reach out and we'll tell you how we can have that conversation. And let's do this. Um, there is no time like the present. And certainly, we're well into the third quarter now. Yep, couple weeks in, and you have an estimated tax payment deadline coming up September 15th, and then you have the home stretch of the year. So now is a good time. Um, when you do have some time between compliance steps with your taxes and your books to really sit down and think about whether it's time to actually make your practice profitable and uh, cash assured. So if you feel like that's a good idea, let's talk soon. Okay. So until next week, I hope you have an amazing rest of the day, an awesome weekend. Stay cool in this heat wave we're having so far here. And by the way, if you have a chance, do something randomly kind for a stranger today. Okay. So with that, so long, and we will